Right now, BigBear.ai Holdings Inc., ticker symbol BBAI, is trading live at exactly $5.80 USD, down about 0.045 points or roughly 0.77% on the intraday session. If you are watching the charts, you are seeing a stock that is trying to find its footing after a tumultuous few weeks, hovering right near that psychological $6 line, but currently slipping just under it. The market is open, the volume is ticking, and the red candles we are seeing today tell a very specific story about investor hesitation. But if you think this is just another case of a small-cap tech stock running out of steam, you need to look closer, because the expectation here is that BigBear.ai is just a meme version of Palantir, riding the coattails of the broader AI boom. The reality, however, is substantially more complex and arguably more significant. We are not looking at a company that is simply burning cash and hoping for a miracle. We are looking at a business that just fundamentally altered its operational DNA with the Ask Sage acquisition, a move that the retail crowd on the Robinhood app and the institutional giants using Interactive Brokers are interpreting in two completely different ways. That divergence creates opportunity, but it also creates a massive trap for anyone not paying attention to the fine print of their latest Q3 earnings report. Let's break down the immediate price action we are seeing right now. The stock is sitting at $5.80 USD, which is a critical consolidation level. Over the last 10 days, we saw BBAI surge past $7 following the announcement of the Ask Sage deal and the earnings beat, only to retrace nearly all of that enthusiasm. This is a classic buy the rumor, sell the news event, but with a twist. The selling pressure we are seeing today, dragging us down that roughly 0.75%, is likely coming from short-term traders who are hoping for a sustained breakout above $8 and didn't get it. When you look at the volume profiles, it's clear that a lot of the buying that happened earlier in November was speculative. Now that the dust is settling, the fast money is exiting, leaving the long-term holders to decide if $5.80 USD is a discount or a warning sign. This is where the psychology of the market gets interesting. Most retail investors, especially those using streamlined platforms for online investing like SoFi Invest or the mobile-first Robinhood stock trading interface, often react to the headline price. They see a stock down from $7 to $5.80 and think bargain. Meanwhile, the institutional money, the folks managing risk through Fidelity Wealth Management accounts or executing complex strategies on the Interactive Brokers trading platform, are looking at the valuation multiples and the debt covenants. They are asking if the company can actually digest a $250 million acquisition without diluting the current shareholders into oblivion. To understand why this price point matters, we have to look at the context of the last quarter. On November 10th, BigBear.ai dropped their Q3 2025 earnings. The expectation was a mess. Analysts were predicting wider losses and shaky revenue. The reality was a surprise profit, with net income hitting positive territory, although a large chunk of that was due to non-cash adjustments in derivative liabilities. That is a fancy way of saying their financial engineering looked good on paper, even if the core business revenue actually dipped slightly year over year due to slower Army contract volumes. This mixed bag is exactly why we are seeing this choppy sideways to down movement today. The market doesn't know whether to celebrate the profitability or worry about the shrinking revenue in the defense sector. It's a tug of war. On one side, you have the bulls who see the mini Palantir narrative taking shape. They look at the Ask Sage deal, a generative AI platform that is already being used by thousands of government teams, and they see a massive catalyst for 2026. On the other hand, you have the bears who point out that government contracting is slow, bureaucratic, and prone to delays, as evidenced by the revenue miss. This tension is what keeps the stock pinned here at $5.80. It's the equilibrium point between high-growth dreams and the cold, hard reality of government procurement cycles. Speaking of that procurement cycle, let's talk about what BigBear.ai actually does, because it's easy to get lost in the AI buzzword soup. Unlike NVIDIA stock, which sells the shovels for the gold rush in the form of chips, or Tesla stock, which uses AI for consumer robotics and driving, Big Bear is purely B2B and B2G, business to government. They specialize in decision intelligence. Imagine a logistics commander in the Air Force trying to figure out the most efficient way to deploy assets across the Pacific while accounting for weather, fuel costs, and potential hostile interceptions. Big Bear software ingests all that data and spits out actionable scenarios. It's less about generating text like ChatGPT and more about generating strategy. This is why the comparison to Palantir is so persistent. Both companies take messy, disparate data and turn it into a clean operating picture. However, Big Bear is much smaller, which means the risks are higher, but the potential multiple expansion is also greater if they execute. The recent acquisition of Ask Sage is an attempt to bridge that gap. Ask Sage brings a secure generative AI layer that allows government users to actually interact with their data using natural language, something that is incredibly difficult to do in classified environments due to security clearances. If Big Bear can successfully integrate this, they become a much stickier product for their defense clients. Now let's look at how the different classes of investors are approaching this. If you browse through the forums where people discuss self-investing or look for investment help, you will see a lot of chatter about BBAI being a potential multi-bagger. The narrative among individual investors on investing sites is that defense spending is only going up. We are living in a geopolitical environment that is becoming more fractured, not less. Governments are scrambling to modernize their militaries, and AI is the tip of that spear. For a retail trader using a Fidelity brokerage account or managing their own Fidelity IRAs, the thesis is simple. Buy the small defense contractor before it becomes a big defense contractor. They are looking at the stock price of $5.80 USD and seeing a cheap entry point compared to the triple-digit price tags of established defense firms. They are comparing it to the early days of other tech giants, hoping to catch lightning in a bottle. There is a sense of FOMO, fear of missing out, that drives this, especially when they see other AI stocks flying. However, if you talk to someone using a more sophisticated setup, perhaps a professional utilizing Schwab Intelligent Portfolios for asset allocation, or an active trader on the Interactive Brokers platform watching the order flow, the view is more cautious. They are looking at the balance sheet. They see that while the cash position is decent, the company is still burning through capital to grow. They are looking at the convertible notes and the warrants mentioned in the earnings report, financial instruments that can create new shares and dilute existing holders. For these investors, the current price of $5.80 USD isn't just a number, it's a valuation metric that implies a certain amount of future growth that hasn't been proven yet. They are hedging their bets. You might see them selling covered calls on the Robinhood app to generate income while they wait, or using Fidelity ETFs that offer broader exposure to the aerospace and defense sector rather than going all in on a single volatile name like BBAI. The smart money is interested, but they aren't chasing. They are waiting for proof that the Ask Sage revenue, projected to be around $25 million in 2025, actually hits the bank account. This brings us to the macro environment. We cannot analyze BBAI in a vacuum. We have to look at what is happening with the broader markets. Today's move is partially correlated with a slight rotation out of high beta growth stocks. When yields on treasury bonds tick up, as they have been doing recently, investors tend to pull money out of speculative tech and park it in safer assets. This hurts companies like Big Bear disproportionately because their big payoffs are years in the future. If money becomes more expensive to borrow, it becomes harder for growth companies to finance their expansion. This is basic economics, but it hits your portfolio hard if you are overexposed. You see this anxiety reflected in the comment sections of investment sites and trading forums. People are asking, is the bull run over? Or should I switch to Fidelity mutual funds for safety? The answer usually depends on your time horizon, but for BBAI specifically, the macro headwinds are a real factor keeping a lid on the price today. I want you to take a second and think about your own portfolio. Are you holding this because you believe in the mission of AI-driven defense, or are you holding it because you saw a green chart last week? It's a tough question. Comment below how many shares of BigBear.ai you currently hold and what your average buy-in price is. I am genuinely curious to see if most of you are underwater from the recent highs or if you got in early at the lows. It helps us understand the sentiment of the room. Also, while you're down there, let me know if you use a dedicated broker like Interactive Brokers or if you stick to the bank-integrated options like SoFi Invest. The platform you use often dictates the tools you have to analyze these moves, and it's interesting to see the correlation. Let's shift gears to the technicals. If we zoom in on the daily chart, $5.80 is a level that has acted as both support and resistance in the past. It's a zone of high liquidity. In trader speak, this is where the battle is happening. If the bears manage to push the price below $5.50, we could see a quick flush down to the $5.00 level, which is a major psychological floor. However, if the bulls can step in and defend this $5.80 area,